Camber Energy. We're going to be talking about the last earnings report. A lot went down. A lot went down in the last couple months for Camber Energy Inc. And I'm going to try to break it down as best and as concise as possible. Obviously, I'm still invested. We're going to get into my share count as well. But I don't want to, take away from what I have. I'm just going to get into it. It's a lot of info. So if you're a Camber Energy investor, make sure you're paying attention. I'm just going to be going through it, okay? No other way to do it. Just going to be going through it. So CEIN, which is the new ticker symbol for Camber Energy Inc., CEIN on OTCQB. So Camber Energy now is essentially back on the over-the-counter OTC markets after they already pulled up Viking from the OTC. And the reason why they are back on OTC is because when they were on the American AMEX exchange, they had to keep a 10-cent minimum bid price for their stock. Unfortunately, due to dilution, finishing up the dilution from Kirkland, the Viking technology, and the payments that had to be paid for people to the company, that took us down the 10-cent threshold. And so we got delisted from the American exchange. Now, with that said, we're now on the OTCQB, and the stock is sitting about at 2 cents. Now, with the over-the-counter and with this class of over-the-counter stock class that CEIN is in, it can't go below a penny. And I don't believe it goes below a penny because from what I've seen from the earnings report, most of the dilution's done finally after all these years. And, CEI has a market cap of about 5 million right now. And the company makes almost going to be making 40 million in revenue this year. So I'm not too worried about it getting even close to a penny. The volume's been really low. And so I'm pretty confident in that the bottom is in, unless by some horror show of fate that there's more dilution to come. But I think it's all done by the volume I see. So let me just go through this slide a little bit. So the OTCQB venture market is for entrepreneurial and development stage U.S. and international companies. To be eligible, companies must be current in their reporting, have a minimum bid price of a penny, and may not be in bankruptcy, and must undergo an annual verification and management certification process. So, the OTC does have a bad rep of not having access to all the info necessary, but there's different classes of over-the-counter stocks. Again, CEI is on one of the higher rankings of OTC stocks, so they can't play around with not reporting, being in bankruptcy and whatnot. They have to be a legit business. Although short selling is allowed on securities traded over the counter, it is not without potential problems. These stocks generally trade in low volumes that make them illiquid. An investor trying to cover an unprofitable position could get stuck. Like I just said, going back to the volume on OTC, if anybody's really trying to short Camber Energy at 2 cents at a $5 million market cap right now, when they're one bingo square away from having the patents complete for the grid tech technology, good luck to them. They're going to get squeezed if they did that. But, in conversation with James a little bit, obviously he talked about how he didn't want to do a reverse split. A reverse split's not happening. As you see in the shareholder letter here, he breaks down. But he was also worried about short sellers. And if he did a reverse split to stay on the AMEX exchange, the short sellers could still get easy access to him. So being on OTC now is kind of like a defense mechanism. Obviously, you don't want to be delisted. But I've always said, if CEI doesn't reverse split again, all the original shareholders who got hurt by the first reverse split have an opportunity to make their money back. And even at 2 cents, even on OTC, we haven't reverse split. And I still do feel the same way. I do feel like this company has that type of potential. The OT, and so there's some key takeaways and some key differences about the over-the-counter. The OTCQX is the highest quality tier of OTC markets and offers trading in companies that are not listed on traditional exchanges. Companies listed on the OTCQX markets have to follow certain rules and criteria that are subject to SEC regulations. For example, they have to adhere to governance transparency, must not be penny stocks. Two lower tier venues for OTC trading in the US are the OTCQB, which we're on, formerly the OTCBB, and Pink Sheets. So we're in the middle tier. And if CEIN does a good job, maybe we move up to the QX. But technically we aren't a penny stock because we aren't a penny. We're over a penny. And so hopefully we stay that way moving forward. If you ask me, CEIN, Camber Energy, is one of the best premier companies on the over-the-counter markets. As you see here, OTCQB, Camber Energy, from August 2024, when we got it, we got a verified profile. We're penny stock exempt, transfer agent verified, independent directors. We're all in hand for that. So we got Camber Energy Inc. OTCQB Marketplace equals 333 English ordinal. That's 33 letters. Very powerful there. I think we're going to be doing damage on the market. So 333 ordinal. We got Camber Energy Inc. on OTCBQ Marketplace. Obviously 333 English ordinal, but it's that 153 reduction as well, that 33. So very powerful, very, very powerful. We're going to do damage on OTC, and I'm so excited. I am head over heels excited. And so let me just break down this shareholder letter real quick, and we keep moving forward. 1 second. 1 second. Let me get it there. So I'm gonna read the shareholder letter that came out after the delisting. Dear shareholder, this came out on August 27, 2024. Dear shareholders, we take this opportunity to provide a brief update on certain matters involving the company. OTCQB designation. Effective August 27, 2024, the company shares of common stock trading under the ticker symbol CEIN have been approved for upgraded quotation on the OTCQB venture market. The OTC is a premier marketplace for entrepreneurial development in U.S. stages. We just talked about this a little bit, and obviously, and James goes on to say that if they wanted to stay on the AMEX exchange, they would have to do a reverse split. And he said a reverse split was out of the question. He wants to save the shareholders, and we're going to build this company up on OTC, and I am okay with that. So all the doubters, the bearish people, we're not reverse splitting. Okay. So don't count on it, and we're going to be building. CEIN, stockholder equity. So right now I calculated the stockholder equity. So if we look at it, let's go in a little bit more. Let's get the real numbers. Okay. Let's get the real numbers. So we want to go to the bottom. We see this. Stockholder equity is 3,110,322. That's as of 2024. And so that when we go to the top, so we got 3.11 million divided by the shares the company now has, which is, well, it doesn't have here because the common stock after the quarterly report was 200 million, but they added 29 million after the quarterly report. And you can see right here on the OTC Markets website, they had held at DTC, which is usually like the true float on OTC at 227 million. But on most exchanges, you'll see is at 229.1 million. And so with that being said, the book value or stockholder equity, the book value is 1 penny. And so 0.0136, so 1.36 pennies. And so with the stockholder equity book value Camber Energy has currently, it wouldn't be at risk at the reverse split. It wouldn't be at risk at delisting. Okay. And the current assets we have on hand is 78.98 million. That's a little less than we had in 2003, but we started to shed some of our oil assets, which was okay. So yeah, that's pretty much it for stockholder equity. I keep track of it. All it is, stockholder equity is what you have, the stockholder equity at the bottom divided by your the shares you have. And how I come with the stockholder equity number is you just take your assets minus the liabilities, right? So that's what I did. And so right now, because you see, look, our liabilities are 75,000, assets, as we talked about, 78. So that's where it comes out. So we're a positive equity company. Now we're getting into the operating expense ratio. So CEIN, operating expense ratios. The operating expense ratios for Camber Energy Inc. are as follows. For 2024, the 3 months was 122.48%, which is essentially double of what it needs to be. But again, we're a growth company. We're a young company. We're not a mature company, of course. The 6 month on the longer time frame is 116.43%. In 2023, the 3 months was 120.48. 6 months was 111.95. And so right now for 2024, the 6 months, which we're on right now, is 116.48. And you have to consider a couple of things, okay? And let me just get into the revenue first. So this is the Q2 reported revenue comparison from 2001, 2022 to 2023. So right now, the 3 month period ended, which was 6/30, so June 30th, 2024, was $9.9 million. So it was almost $10 million for Q2. Think about that. So if you extrapolate that out, we're going to be close to 40 million in revenue by the year end. And so let's look at what we're at right now. So the 6 month ended June 30th, 2024. Our revenue in general up to this point is 18.2 million. So we're on track about, 36 to 40 million, like I'm saying. Operating expenses high right now, 21 million. But again, the ozone trash, the sanitizers, the power generation for CEIN, they do have high cost of goods sold, unfortunately. And as you see, operating expenses, cost of goods sold right here, 12 million for the 6 months ended, right? And you see the difference for the 6 months ended 2023, it's 9 million. But we didn't have ozone up, we didn't have power generation up as we did. That costs money. As soon as we get those type of sales, we have to build those generators. We have to build those trash ozone sanitizers. But with our grid tech and our carbon capture technology, that's when we start getting into the lower cost of goods sold, because the grid tech software, carbon capture is really just attachment pieces, service, maintenance, handling, not really overhead, not much cost of goods sold. But this is why I bring this up, because again, you want to start getting into the nuances of things. Why is OER important? Why are we looking at OER when it comes to Camber Energy? All right, so think about this, right? Through this whole time, from I've been in stock since 2021 to 2024. The biggest thing for growth companies, especially companies that are trying to be in utilities, have commodities, build infrastructure that costs a lot of money, and a lot of upfront funds from a lot of different financing situations. And a lot of times, if you actually look at James Doris is the CEO of compensation, it's not that much. All right. Yeah, it's on par for smaller CEOs. It's not like he's going broke. It's not like he can't feed his family, but it's not a whole lot, not for the potential. And also, you have to understand, for once they get a business off the ground, you have to pay yourself first. So say you're on it's the same analogy for an airplane, right? So say if an airplane's going down, right? You're supposed to do your masks first, because you can't help, especially for when it comes to kids, because you can't help your kid out if you're passed out because you have no oxygen, right? You're useless. So you got to worry about yourself first. So if the plane's going down, you can help others. And it's the same thing in the stock market. I'm not condoning CEOs, executives having gross salaries and overpayments. I believe everyone should be paid fairly for what their job is at hand. Doesn't matter if it's in the stock market, a public company, or a private company. I believe that. And I also understand that when you're building a company, when you finally get some leeway, you have to make sure you're paying the people off that helped you, right? That helped you get to that point. And so this is where I come in for the operating expense ratios. When you look at the differences of why it increased in 2024, when you would hope is decreasing from 2023 to 2024, but it kind of makes sense. There was a $2 million increase in operating expenses due to $1.7 million in general admin and $305,000 in stock-based compensation. So essentially, there was $2 million allocated for workers, in stock, but also for general admin. So day-to-day workers, $2 million. So that could be like pay raises and whatnot, which obviously you don't want to see your expenses rise, especially when it comes to paying yourselves, when it comes to company paying themselves. But when you look deeper at the numbers and you just take that from the side for a second, obviously there's no company if people aren't making money at the company, right? But you take that $2 million out, everything else stays the same. Take the $2 million out, right? So you take that $2 million out, you have operating expenses. So then you have $19.7 million in operating expenses, right? You minus the depreciation of $411,000, and then you divide that by the gross revenue, right? That we're coming in 6 months right now at 18. Where does that put our 6-month OER? It drops significantly. It drops 10 points. We are close to being a flat-out break-even company without the increase in operating expenses for general admin and stock-based compensation. And this is all off the back of mostly power generation and a little bit of ozone sales. So if you're looking at it, without having our two potential drivers of profit and revenue with carbon capture and grid tech technology, we're almost already at a break-even rate. And you would hope you don't see stock-based compensation and operating expenses continue to rise at a dramatic rate every year. I understand it now for where the company has been and where the company plans to go. You have to pay your people to keep talent. I get that. And so moving forward into the next couple of years, I think there's a change where people, okay, they got their stock, they got their salaries. We're happy. We don't have to add that to the expenses moving forward. And so imagine we have carbon capture, we have grid tech up and running, we have revenue coming from power generation, we have ozone up, and we're sitting here right now at 105, 106 OER with without stock-based compensation. Where is the company in a year from now, operating expense-wise? Think about that. We in a whole new ballpark. We could potentially be in that 70 range, right? We could potentially be in that 70 range. And you see right here, how did I find that? Well, you can go right here. Obviously, general admin, you see a $2 million increase right there. Stock-based compensation, there was no stock-based compensation in 2023, but then I highlighted a little bit more down here as well, so you can see it a little better. So overall, I'm kind of bullish. Well, I've always been bullish on Camber Energy, but this right here is important information. I hope people actually spend the time to continue to look at this. So we're almost a break-even company, Camber Energy, and I'm excited. I'm happy. The CEIN growth drivers and solution to OER. And so these are the growth drivers we have coming up. We have carbon capture technology commercialization. We have the expo coming up, Hamburg, in Germany, October 23rd to 24th. Hopefully CEI is there. We should be there because we have a carbon capture facility being built in Wesselburg, Germany. It's already under contract. It just needs to be funded. And then we have, the Camber wildfire mitigation technology. As I keep saying, we have that one bingo square pending yet still. We have that patent issued. We're just waiting on that one right there. And once we get that, commercialization's all full, ready to go. Ready to go. And so what's nice about the wildfire mitigation tech is one patent issuance away, complete all steps, and it's logic-based software application. So it's software. You just attach it to the existing power lines that are already. There's no real upfront cost, to get it up and running. You just attach it, and you're good. So when you talk about the OER for technology companies, that's where we start getting into the fun realms of things, where the carbon capture and the wildfire mitigation technology, they don't have a whole lot of costs to make money. And so when you have those other operations that do have higher COGS, now we're getting into that 70 to 60 range as a conglomerate. So I think James is doing a good job blending business branches. And I think in the long run, it's going to work out for everyone. But these are the drivers that we're going to have. And Camber Energy Inc. is Utili-Tech. And CEIN, logic-based broken conductor, both equal 133 in reduction. We'll talk about what I mean by Utili-Tech in the next slide. Camber Energy is a Utili-Tech company. Software companies can be attracted to investors because of their potential for rapid growth, especially if they have a popular product or service. The shift to cloud computing and software as service subscription models has also given many software companies a large base of recurring revenue. And let's look at the largest software companies by market cap. Obviously, we have Apple, Microsoft, Alphabet, Oracle, SAP, Salesforce, Adobe, IBM, ServiceNow. The list goes on. Besides SAP, they're all USA companies. So obviously the technology is here in America. And I feel like Camber Energy is going to be a Utili-Tech company, which is a little different because it's a utility based in some areas, but it's also technology based in others, and even commodity based in other places. So Utili-Tech is a term that I came up with, and it just rolls off the tongue because Utili-Tech. Camber Utili-Tech logic-based software and Camber logic-based broken conductor tech both equal 333 English ordinal, 198 reverse reduction. Some more, we have growing Utili-Tech companies, 133 English reduction, 137 reverse reduction. We have Utili-Tech stocks in Age of Aquarius, Utili-Tech companies, ESG movement, both equal 133 reduction. We have Camber Energy Inc., Utili-Tech stock, which is 137 reduction, which is the 33rd prime. So there's a lot of powerful numbers coming here in play. As you see, this is my share price average right now. We got 33,333 shares. Average cost per share is $1.51. Obviously, I'm down 98%, but I got over 50 grand in it. I'm okay. Just I'm long term. We already know the deal, and so that's what I have on Camber Energy. Hopefully, you guys learned a lot about the company, where it's going, how I feel about it. What are the drivers moving forward? Are they improving? And I think I went over some key aspects to that today. So hopefully you learned, and if you need to go back and watch this live stream later, make sure you do so.